Hey guys, Donnie here, and welcome to Stocks for Stoners, Episode 7. In this episode, I was going to go a little bit further with the options trading, and I was planning on doing it all nicely edited and pretty looking, but as far as that goes, I'm having trouble getting my hands on an editor. I decided I'm going to spend money on one, and so that's going to happen within the next week or two, but it's not going to happen today. Sorry. So today, we're going to potato camera up this a little bit, and we're going to check out, hang on, let me pull this up. Should pop up. Okay, we're gonna check out options chains. So like as I said, I'm gonna potato camera this a little bit. I'm gonna bring the camera forward to my television here. As you can see, I'm blocking my account number and everything, just so I can kind of explain the options to you and how to read it. Basically, it's going to be real quick, real brief, real basic. This is just going to explain in the money, at the money, out of the money, and how to read that so that you understand what cost is coming to you. And yeah, so let's go with this. Let's set this up. I need to kick my dog out of the way here. Move it, move it. And we're going to move the camera forward. Okay. So, let me see if I can get this set up in focus for you guys. Again, I'm sorry about this. This is not my intention. I think that should work. Like I said, I'll get this all set up eventually here. Oh, wonderful. That wants to sit crooked. Once we do that, okay. There we go. So, as you can see, here's my option setup page on First Trade. If you look below down below in the section where I have all the information about this video, you will see I have a link to First Trade that will get you 2 free stocks. And there's also links to other accounts as well, such as Webull and stuff like that. I'm talking about First Trade right now because First Trade, I haven't had any issues, and I can totally order covered calls and protective puts, as you can see right here. Other options privileges, it says no on, that's buying puts and calls, spreads and straddles. There's other things later on we'll talk about. Right now, all I talk about is covered calls and protective puts. What that means is that you have money down on that put, that call, that option, and you're basically protecting your ass by putting money down on the line. They don't have to put you into margin, things like that. Yeah, we'll explain a lot of those things later on as we explain orders and stuff like that. Right now, like I said, we're just talking about the options chain and how to read it. So let's get into that a little bit further here. And I am going to, there we go. So as you can see here, we'll go through this real quick. As you can see, there's the transaction, the contracts, underlying symbol. We're going to type in AMC because that's the popular one, right? Then you can select your expiration date. It'll give you a list of expiration dates up here, which is pretty nice. This is really a great setup from First Trade. I do like their options orders. You can do the strike and everything like that. After you've selected stuff, you can do your call, put. I've explained limit, market, stop limit, price, stop price, all that stuff to you guys before, so hopefully you should understand that. If not, go back to my earlier videos, watch them. You should understand it after that. And again, if not, just ask me in the comments and I will explain it slightly further for you. So what we're going to do here, this is where you make your order. You can select the symbol and everything like that, call, put, blah, 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 blah. We're talking about the options chain, so we're going to bring that up. So now here is the options chain. And I'm going to come back over here so I can use my pointer stick. In the options chain right now, AMC is selling at $13.58 a share. So at $13.58 a share, we got $13.50, 14. They're always going to do it in dollar or 50-cent increments and the strike price here. Okay, so your strike price is going to be at the money is going to be pretty much $13.50, $14. Right here is at the money. So in the money, when we're discussing it in the money, as far as a call goes in the money is anything you see in this darker area here. So as you look over here, 1350, 13, 1250, 12, 1150, you're saying that you, in a call, that you believe the price is going to stay above this price here, and you're going to make some money off of that, right? So if you think the price is going to continue to raise up, you'll make more money off of the profits from a lower call. But it will cost you more to get there, just so you know. We'll explain that in just a second. At the money, like I said, about $13 to $14 here. It's going to be, the price is at $13.58. So if it's going to go up or down, this is, going to be kind of your, as far as the price goes, one of your better options. You will make a profit or you'll lose it. It's just how options go. Again, if you think the price is going to continue to go up, then getting in the money or at the money is going to be a really good choice for you. Out of the money is down here. Everything in the white, this is all out of the money. So basically you think the AMC is going to go up to over $16 in price a share, okay? So you're putting it, your money on the call so that you can, eventually get up to $16. If it goes over $16, you'll start making a profit. You can fill the contract and get all 100 shares and pay the price that you're putting it at. So if you did the $16 call, you'd be paying at $16 a share for 100 shares. You can sell the option without executing it, and once you sell the option, you'll make the profit if it goes over the $16 call there. So that's again why you'd want to stay in the money or at the money when you're looking at a call, especially if you're not 100% sure that, lately you've been watching AMC kind of riding sideways on the charts. So getting up to $16, you got to have a lot of faith in it at that point. I mean, I have faith that AMC is going to do well. Don't take that as like AMC is crap or anything like that. I have faith they're going to do well. They've been doing well. But, as far as getting to $16 within one of the expiration dates up here is going to be, I would, if you're going to try to go for the $16, I would choose a expiration date way out here. Okay, just so you know. That's again if you feel confident and all that stuff. So we'll talk about the ordering in a future video, guys. Okay, I'm sorry. We'll discuss ordering, the expiration dates, all that. Right now, we're just going to discuss in the money, at the money, out of the money. Okay, so if you're going to do it in the money, it's going to cost you a lot more to get your call, to get your option, if you're doing in the money, than it would at the money, or it would out of the money. It gets cheaper as you come down because the people setting up these call options or setting up the options chain think it's going to be a lot more difficult for you to get down here. But that's just all based on algorithms and other stuff and things that are a little more complicated than we need to talk about right now, especially since we're getting close to our 10-minute mark. We're at 8.5 minutes right now, so we're going to finish this up as quickly as possible. So with puts, it's slightly different. Here again, we're just still at the money at this point. This is at the money, regardless of whether it's calls or puts. Right here, where it's $13.58, $13.50, $14 is at the money. So with a put, though, this is out of the money up here. As you can see, the white matches each time. Out of the money is always going to be white. In the money is always going to be the darker options chain. So with a put, you're betting that the price is going to be below this value here. Okay, so if it stays below that value, you're making money on it. If it goes above that value, you're losing money on it. So that's why with the puts, again, you kind of want to stay in this area here, at least by my personal opinion, unless you really feel that it's going to drop down to like a super low price. So be like, I want a $11.50 put because it's going to go below $11.50, or again, you could spend a lot more money because if it's going to stay below $16, you're going to make your money off of that, blah, blah, blah. So Okay, so we'll finish this up so I can give you a good idea of how to read what an option is going to cost you. Okay, I know I've shifted this camera around, bumped it, and stuff like that. I'm really sorry, guys, especially because I have to potato it out on you. So, best way I've found to read the options is you got to remember this is all going to be multiplied by 100. So when you come into the option, let's say we're going to get a $14 call right here, okay? So we want the $14 call. So right now we're going to look at the bid and the ask. And if you remember, the bid is what you want, or is what you're trying to get it for. The ask is what they're trying to sell it for, okay? So when you look at this and you're setting up your call option and you're looking at the $14 call, always try to remember that it's going to probably cost somewhere around this when you set up a call. And that's doing a protected call, protected put. It's going to cost you right here. So you're looking at $1.39, multiply that by 100, that's $139, okay? So you're going to be spending $133 to $139 to get this $14 call right here in order to, try to make your profit on it. If the price goes down this direction, you'll lose money if the price goes this direction, just so you know. And then over here with the puts, say you wanted to get the 1350 put because you want price to go up, you want price to go down. So we're going to go 1350 put, and that's going to cost you anywhere from $115 to $123 for that put, okay? And that's a protected put. You can also get them, we'll explain it later on, you can get puts that is going to make you money, possibly. That's a sketchy one. Again, that'll be a way later video because that's going to be a big explanation, and it has to do with a lot of risk, so I'm not going to talk about it right now. So anyway, guys, we're getting past the 10 minutes now, and so if there's any questions at all, feel free to ask. Feel free to ask it all. Remember, in the money, at the money, out of the money, out of the money, at the money, in the money. So yeah, I hope that explains things for you. This right here is really good to read. Options are risky and not suitable for all investors. Very, very important to remember. That is not suitable for all investors. If you are not agreeing to this risk of losing money, of losing $139, of losing $123, or more or less, depending on what you're choosing, if you're not willing to lose that money, don't mess with options. So anyway, guys, yeah, I think that's it. If you have any questions, feel free to ask below in the comments. I will answer them to the best of my ability. If you have any questions about any of my previous videos and anything I talked about in them, feel free to hit me up on those videos. It'll be easier for me to remember what we're talking about if you go back to, like, hey, I wanted to discuss this thing with the limits, and so it'd be easier if you asked me that on the limits video. Gosh, fix my camera. And yeah, so otherwise, guys, I think that's it. I'm gonna end this video here. Down below, look for the links to go to First Trade, E-Trade, Webull, crypto sites, all those different ones. They all help me, they all help you. It gets you free stuff, gets me free stuff. So click on it, check it out, and you guys have a great day.